Hi, everyone. Welcome to our Savvy Tax Planning Election Update. I'm Sean Bailey, Editor-in-Chief at Horsesmouth, and I'm here with Jeffrey Levine, one of the co-creators of the Savvy Tax Planning Program. I think everybody in this industry knows Jeff. Jeff, let's jump right into it. Your
Sure.
thoughts on the results of the election and what this is going to mean for taxes between, what does it mean in the big picture?
So I think first off, it's unfortunate that we don't have finality as to what the Senate will look like right now, because that's a pretty significant deal. As we stand today, it appears that former Vice President, now President-elect Biden, will take the White House and will become president come January. It is clear that Democrats will continue to hold power in the House, although with fewer seats than they had in the last Congress. But the Senate is still essentially up for grabs. Right now, it looks like we'll have 50 seats controlled by Republicans, another 48 seats controlled by Democrats and the independents who caucus with the Democrats. And you might say, well, Jeff, that's only 98 senators. Aren't there? Yeah, there are. And it's because we don't know what will happen with the two senators from Georgia. Both Senate seats from Georgia are up for grabs because no one received more than 50% of the vote there. So they go to a special runoff. And that, unfortunately, won't happen until January of next year. So we just we just really don't know what the Senate will look like. And of course, in a 50-50 tie, what we end up with is the deciding vote being cast by the president of the Senate. And of course, I'm going to apologize. You know, Sean, whenever you go to live stream these days, you're going to have background noise because it's just the way it goes. So there's gardeners in the area, and I'll just we'll do the best we can here. But in a 50-50 tie, we would be having the deciding vote cast by the president of the Senate, who is in fact the vice president. And of course, Democrats, if they have the House, rather the White House, they would have the majority there. So that really could completely change the landscape of the tax policy that we would see. Clearly, if Republicans get at least one seat, which a lot of people believe they will, then they will have control over the Senate, and they could essentially block a lot of legislation, almost all legislation. And whereas normally it takes 60 votes to advance most legislation through the Senate, the reason we're focused on a simple majority here is because certain types of bills can be passed via what's known as a reconciliation process, via reconciliation. And specifically, this is how Democrats passed the Obamacare rules without any Republican support back in 2010. And it's also how Republicans passed the Tax Cut and Jobs Act without any Democratic support back in 2017. So if Democrats control the Senate, we could see that. Now, having said that, a lot of advisors and certainly many consumers out there are likely aware that Vice President Biden, again, now President-elect Biden, put forth a fairly progressive tax policy on his platform, increasing rates for those above $400,000 of income, creating a new Social Security tax for those with more than $400,000 of earnings, changing capital gains tax rates to ordinary rates for those with more than $1 million of earnings, reversing the changes that were made as far as the estate and gift tax exemptions as part of the Tax Cut and Jobs Act, and a host of other progressive tax policy changes, from introducing more credits for those at the lower end of the income spectrum to even eliminating the deduction that people receive today for 401k and IRA contributions and replacing it with a flat credit amount that would have a disproportionate benefit to those at the lower end of the income spectrum and hurt those, at least from a tax dollar perspective, from those at the higher end of the spectrum. The fact that at best we'll end up with a pretty split Senate, in a best case scenario for Democrats, looking at it from their point of view, it's a 50-50 split, which means they cannot afford to lose even a single vote and pass that legislation. So what it tells me is any changes to the tax law will likely be more muted than they would have otherwise been if Democrats had a true blue wave and maybe had 53, 54, 55 seats in the Senate, because there will be some a lot of pressure, let's say, from purple state Democrats and in certain places where there are high tax rates already, not to further increase those rates. And so if you go to an extreme, obviously everything is relative, but the more extreme you go, the more likely it is you may lose just even a single one of those Democrats. And if Republicans hold the party line and have all 50 votes on their side, one Democrat kind of switching teams for just the one vote, if you will, that could stop the legislation from moving forward. So I think at best, we're looking at a muted version of what the Biden tax proposals were as part of the presidential platform.
Right. I am reminded that it was Joe Biden many years ago who was responsible for convincing Arlen Specter to change parties.
That's right.
And he's a person who knows the Senate well. Of course, likewise, people like Joe Manchin could be convinced to go over to the Republican side. I mean, it's hard to say. There could be a whole other layer of, political, I don't know if you'd say horse trading or machinations, probably be a better word. It's 2020, the year that keeps on giving right into the first week of January is what it seems like we're looking at. What are your thoughts regarding what advisors should be saying and recommending to their clients around tax actions between now and the end of the year? Is there anything solid that you can hang your hat on relating to that question?
Well, I think there are a few parts of this. First, I think advisors should be realistic about what is going on. I understand that there are challenges going forth, and it's important to let those play out. But the overwhelming likelihood is that Democrats will control the presidency, and obviously that will influence how policy is shaped. From there, I think it's important also to understand, exactly what we were just discussing, that by virtue of the way this election played out, it wasn't the true blue wave that a lot of people thought would occur, right? If we're objective about this, Democrats lost seats in the House. They did not pick up enough seats in the Senate to flip it. And certainly, or even if they do, it'll be a 50-50 tie with the flip vote being the vice president at best. Right. So it wasn't that true blue wave that a lot of Democrats were hoping for. So when we're talking about what changes may occur, it's worth discussing that with clients and letting them know that the extremes that may have occurred on one side or the other, if there were, large majorities held by a single party, are not likely to occur here. We're likely to see at least a couple of years here of muted changes, which candidly may not be the worst thing in the world. It's very difficult to plan from a tax planning perspective. It's very difficult to make good educated decisions when every few years we have a complete flip from very progressive tax policy to very conservative tax policy to very progressive tax policy. It's almost like flipping a coin in the air and seeing what it lands on every few years. So a more muted approach can actually be beneficial from a tax planning perspective. What your personal thoughts are of whether that's good tax policy or bad are somewhat irrelevant. It's just easier to plan in those situations. The one thing I would point out, though, is that by virtue of the fact that we are likely to see a Republican-controlled Senate. Again, Democrats have to win both seats in Georgia in order for them to have a shot, to control the Senate. If we have a Republican-controlled Senate, it creates gridlock. It reduces the appetite to try and move certain things forward, like very progressive tax policy, like healthcare, et cetera, that may get logjam in Congress. And instead, Congress may turn to other things where there is largely bipartisan support. So this might be something along the lines of infrastructure, or for our purposes here, this could be retirement legislation. There actually is bipartisan support to do, let's call it Secure Act Part 2, right? So a second Secure Act, if you will, where changes might include increasing the required minimum distribution age again from 72 to age 75, et cetera. We're more likely to see that happen sooner if we have a split Congress, because it's something that could actually be moved through. Whereas on the other hand, if we had a blue wave, there would have been other higher priority issues that Democrats would have moved on first. I would point out one last thing, and it's this. The big issue, I think, is still the possibility of the estate and gift tax getting chopped back down to its pre-TCJA levels. And that is something I can absolutely see happening if Democrats have control. And even if they don't, it's something that will occur on its own if nothing changes by the end of 2025, rolling into 2026. And so certainly, look, it takes a lot of money to have to deal with those sort of issues, right? We're looking at, families with, around $8 to $10 million in today's assets in order to really be concerned about this if there are changes. If you're not married and you have only one person, if you're single or widowed, et cetera, then it could be even less or fewer assets than that. For those who may be impacted by that change, if you're planning on leaving large amounts of your assets to your heirs anyway, or gifting large amounts of assets to heirs anyway, then looking at using that gift or estate tax exemption before the end of this year can still be helpful. If we knew the results of the election, the January election for Georgia, I would probably say to push that off because it likely wouldn't change next year at the very least. But if we have no clarity there, you do risk the potential loss of half of your estate tax exemption. For a married couple, it's about $11 million of protection, which equates to more than $4 million of potential estate taxes. Again, we're talking about very bourgeois first world problems here, right? Like very large estates. But look, if you've got a $20 million estate, the last thing you want to do is see $4 million evaporated to taxes unnecessarily when action before the end of this year could have avoided that.
Yeah. So it seems like the greatest likelihood is that the existing tax code just stays in place. That's, because the idea that Georgia would go, both seats would go to the Democrats, it's a possibility, but fairly low. And
you could pretty much assume that there's going to be a lot of Republican money flowing into Georgia over the next few weeks to do whatever they can to hold at least one of those seats. I think even most Republicans kind of behind the scenes would admit that they believe the presidency will, it does belong at this point to Joe Biden as the president-elect. It's clear the House will belong to Democrats. So if you're trying to be that check to the Democratic power, you need one of those seats. And obviously those who have large estates and have high income, they have in many instances or many times greater ability to fund political campaigns and to make donations to super PACs, et cetera. We're likely to see a lot of money flowing into Georgia over the next few weeks to try and ensure that at least one of those seats remains in Republican hands.
Right. Debbie Taylor and I have talked a lot about this period of tax chaos that we entered into, with the rise of Trump's first election. And had there been a sweep, we would be in yet another phase of, probably tax chaos. But right now it looks like, it's still hard to say, but maybe things would be, the existing code will stay. Like you said, maybe a few things be related in the retirement areas, some changes here or there. But overall, the code that we've been operating under for the last 2 years, 3 years last 2 years, I guess, going to continue to be the same, essentially, right?
Yeah, I think if anything, we're likely to see some muted changes. Again, huge changes, the likes of which we saw the Tax Cut and Jobs Act, are not likely simply because of the fact that at best, Democrats still need to maintain party line votes. If they get both seats in the Senate come January in Georgia, that will give them 50-50, which means they cannot lose any single votes in order to push it to a tie break by the vice president. It's going to be difficult with certain things in the law. So it's more likely to be a little bit more status quo for the time being, which makes, again, whether you think that's a good thing or bad thing personally, it does make planning a little bit easier. We don't have the same sense of urgency, like, oh my goodness, we've got to do 75 million Roth conversions here before the end of the year because tax rates are going to be jumping up dramatically next year in all likelihood, right? We don't have that anymore. And candidly, if there are going to be changes, the fact that it'll be a fairly divided Congress means that they will probably, or it increases the likelihood that those changes would be made prospectively anyway. So even if we saw drops in the estate tax exemption or increases in tax rates at the upper end of the income spectrum, it's likely that Congress would push those changes out to a following tax year. so that at least there'd be some time, at least hopefully, no guarantees because it's Congress, they can do what they want. But it would be likely that we'd have at least some time to plan in 2021 if somehow Democrats were to take both of those Senate seats and move through tax legislation through the Congress next year.
Yep. Okay. Doug Pierce, our producer, do we have any questions at this point?
We do have a comment from Ryan. Yeah.
All right. He says, why do we always presume that Congress will always and only vote down party lines? Well, I'll tell you, that's a good question. And there used to be a point in the past when that wasn't the case. I know major tax changes prior to 2017 had always been bipartisan. They'd gone through what's called normal order in Congress, where they've held hearings. All interested parties on both sides of these issues, not necessarily in a partisan way, had a chance to come to these hearings, weigh in, work the members of Congress, and they passed. Not overwhelmingly bipartisan, but there's always been a fairly significant bipartisan buy-in. That did not happen in 2017. I mean, the tax bill was written by a handful of Republicans who presented it as a fait accompli to other Republicans and the rest of Congress, and then it sailed right through. Jeff, do you have anything to offer on Ryan's comment there?
Yeah, I mean, I'd say that the only reason we presume that is because that's how recent history has gone. We've just become more polarized as a nation. The right has moved further to the right. The left has moved a little bit further to the left. And we end up in a place where everybody is almost required to toe the party line. And part of that is also with the way social media has impacted election processes, and in particular primaries, right? When you move forward with those bipartisan moves, when you flip-flop sides, if you will, for a single vote, you end up getting primaried out the wazoo on either your right or the left, and social media has really amped that up, has expanded the, or I shouldn't say expanded, but the word it's amplified it, right? It's made it more difficult for individuals to have a vote on an issue that goes to the other side, because they just end up getting out. They get outworked on either the left or the right, depending upon what side they are when they go to primary. So it's a old issue, but it's become a lot more prominent now with in the age of social media and in the age of constant news cycles and 24 news media, et cetera. Good question.
I do hope that we're able to come back to some normal order and more transparency in the lawmaking process, because
Well, the biggest issue with votes that are passed like this is exactly what we're talking about. We're talking about just goals that are complete repeals of laws, not let's change things, not let's enhance it and make it better, right? When Democrats passed the Affordable Care Act without any Republican support, it made Republicans' number one goal: we want to repeal the Affordable Care Act, right? It wasn't, we want to update it, we want to change it, we want to fix this, we want to make it a little bit different here. It was, let's get rid of it. None of us voted for it. Vote us in and we'll get rid of that lousy law. Again, speaking as a Republican. Now, on the other side, when Republicans did that in 2017, now you have Democrats saying the exact same thing. Like, none of us voted for it. We wanted no part of that. We weren't involved in it. Vote for us and we'll get rid of that lousy law. So when you have no bipartisan support in these bills, you subject yourselves to these more dramatic swings in policy from one administration to the next. If, for instance, you had passed just using the 2017 Tax Cut and Jobs Act as an example, if somehow there had been more compromise and you had 30% of Democrats signing on to the bill, or even a smaller percent, 20% or so signing on to the bill, it would be much harder to repeal it in its entirety now. Democrats might say, we really didn't like these things, but we had to go along with it because Republicans had more of the vote then. Now you could say, okay, we want to just subtly shift those things this way. You don't get that, though, when a single party passes a bill along party lines. The other party simply says, let's junk it. And so, to your point, Sean, I do hope we return to normal order. I would like to see tax bills and other revenue bills passed via normal order. That filibuster in the Senate is really critical, and you don't have it in the reconciliation process. So it really allows these partisan votes to occur. And with regard to tax policy, it's a very unique, like you can't get this with other areas of the law. They don't pass environmental laws like reconciliation is specifically for these revenue issues with taxes, et cetera. So it's a unique way that you can be non-bipartisan and still move legislation through Congress.
Yeah, right. Okay, Doug, anything else? From Stephen, is the proposal to eliminate the step up in basis at death basically dead at this point, given the election results?
Interesting choice of words. Is the proposal to eliminate the step up in basis dead? The answer, I would say, is no. It's not dead at this point. It is certainly on life support. It is unlikely. Again, in order for that to have even a chance of success, Democrats would have to win both of those Senate seats in Georgia. And I have to say that even if Democrats did, in fact, even if Democrats had a true blue wave, I don't think they would have completely eliminated the step up in basis. I believe other groups and other advocacy groups like the AICPA and other organizations would have lobbied Congress to have at least some sort of exemption amount, whether it was, 2 million, 5 million, some amount where you could allocate a step up in basis. Because can you imagine, a more modest income family who bought a house, grandma bought a house 40 years ago for $30,000. It's worth $300,000 today, and grandma put in $50,000 of work over the year. So the basis is 80. Can you imagine having that person pass away and saying to the kids, you're responsible right now for $220,000 of long-term capital gains. Pay up, or we're going to sell the house for you. Right? Like that would be really politically damaging. So I think in all likelihood, there would be some sort of exemption, not to mention the fact that one of the reasons for the step up in basis is that it is a practical part of our tax rules. Matt, how difficult is it sometimes for you as an advisor to go back and figure out what a client's cost basis was on a position that they bought maybe 5 or 10 years ago? Now imagine having to trace that back 2 or 3 generations in the case of, some property that's been handed down or some stock that has been left from one person to the next. That would be an absolute disaster. It'd be a nightmare to try to figure out. So there are a lot of reasons why I think the elimination of the step up in basis is on life support to begin with right now. And even if it were to occur, if the best case scenario from a Democratic perspective occurred and they won both of those seats in Georgia, I still think there would be at least a significant exemption applied to that if they were somehow able to attach it to a revenue bill.
Right. Good. Doug, anything else? Here we go. As we don't know what we don't know, what changes can we expect with taxes? Do you have a short list of things we can do and should do before the end of the year based on what we do know right now?
All right. Well, listen, if you're trying to do things, we know what today we know today's rates are pretty low. At least we have to assume that, right? No, it is possible that rates could go back higher, at least I'm talking on the income tax side now. It's possible that rates could go back higher in the future. But this is probably about as low as we're ever going to see during our lifetime. So looking at our typical types of planning things like Roth conversions, should we be doing those before the end of the year? Are there opportunities for tax loss harvesting to preserve those? Like the regular tried and true strategies that we've always used for year-end planning still apply today. And in some ways, if tax policy does become more progressive in the coming years, doing those things like Roth conversions now before the end of the year, while we know what income tax rates are today, makes even more sense. If you're in a 12% bracket or the 22% bracket today, why not fill that up if you don't think you'll ever be in a lower bracket in the future? this is prime time season for looking at Roth conversions right now as we head into late November, early December. We have a pretty good idea of what clients' income was for the beginning part of the year. And even in the case of business owners, think how many of your clients may have had down years in their business this year, or those that work on commission or don't get a regular flat salary. How many of them might have lower income this year thanks to the COVID-19 crisis and the pandemic and all the fiscal impact it's had on our economy? This might be an optimal year. And kind of tagging along that, Sean, one of the things that's important to remember is the CARES Act passed earlier this year. That was that coronavirus relief bill. Well, the CARES Act gave us the coronavirus-related distribution provision from retirement accounts. As a reminder, that is the provision that says if you were physically or fiscally impacted by the virus. So physically meaning you, your spouse, or a dependent were diagnosed with the virus. Fiscally meaning you, your spouse, or someone of your household was laid off, were furloughed, had your hours reduced, had your pay cut, your business had to close, etc. Those types of things. There, you're able to take a distribution of up to $100,000 out of your IRA, your 401k, etc. in 2020, and a number of benefits apply. One, it's exempt from the 10% penalty. Two, you actually get to spread the income out over 3 years, whereas normally it would all be included in just 1 year. So if you took $30,000 out and you qualified for one of these distributions, you'd have $10,000 tax in 2020, $10,000 next year, and $10,000 in 2022. So really pushing out that liability into the future. Additionally, you have 3 years to put that money back into a retirement account as a rollover and eliminate the tax liability altogether. But here's the critical thing. If you wait and you say, I'm okay right now, I think I can make it, and things continue to go on the trajectory they're going right now, right? The last few weeks, we've had more cases than we've had at any other point. And while our economy is slightly is doing better than it was perhaps in March of this year, if we continue on this trend, there's lots of concern that we might end up in another bad situation. And what if in January you need that money? What if in January of next year you're laid off again, or you're furloughed again, you have your hours reduced again? Well, unless Congress acts, which if we have a divided Congress might be difficult, you won't be able to take that same coronavirus-related distribution in January. If you qualify, maybe it's best to take it now in December. Just kind of hold it in the side, put it to the side and say, if I need it, I have it. And if not, I have 3 years to roll it back and I can eliminate the tax bill. So, things like that are optimal things to look at here before the end of the year.
Right. Good. Yeah, and obviously this applies to a lot more people with the virus now, taking hold practically everywhere. So, okay, thoughts on 2022, 21 Republicans versus 13 Democrats. I think he's probably talking about the Senate.
Mm-hmm. Yeah, I think seats up for grabs. Yeah.
Yeah, that's interesting. I didn't know that number myself.
I wasn't, hadn't looked that far forward yet. I'm barely at 2020 right now. I look, a lot is going to depend on the next 2 years. I mean, I think it's way too early to project that now. It's and candidly, even if you could project it, polls lately have not done well. Right. I mean, let's be realistic, right? Like polling, even though they mostly projected Biden would win, it was not by the sweeping margins, at least in terms of percentage of the vote, right? In terms of the Electoral College, Biden may very well end up with more than 300. In fact, he may end up with the same 306 votes that Trump had when he won in 2016. But it wasn't by the huge percentages of 6-7% of the popular vote that some places were looking at. So we just have to we have to keep that in mind.
Well, I think there's two things on that. One, just by the way, Biden's margin was on a popular vote perspective, I think the largest win since FDR, the largest win in a race that knocked out an incumbent president, the largest since 1932 when FDR beat Hoover. But the other thing to say about the question is that generally speaking, in that off-year election, the out party does better. And we've seen that going back for quite a while now. So, but that's a lot of seats for the Republicans. If that's correct, that's a lot of seats for the Republicans to be defending. but I think generally they would probably have history on their side to some degree. Doug, any other questions? In regards to raising Social Security taxes in some form, is the plan to use higher taxes to increase the Social Security reserves, or are some ignorant legislators thinking those increased taxes go to the general fund?
The plan is as proposed, and inflation is always difficult to say definitively how things would look until you see an actual bill. But the way it appears is that those monies would go into the Social Security Trust Fund to shore up Social Security. So it would just be additional revenue going in there that would be ultimately be able to use to pay the benefits. Of course, as we know, the government has in the past raided the Social Security Trust Fund and basically made it an IOU fund to begin with. So I'm not really sure there's all that much difference between those two, except that in this case, Social Security Trust Fund is owed back that money. But as we all know, Social Security does have some fiscal issues. I think it's likely that we get some fixes to them in the coming years, simply because politicians, regardless of which side of the aisle you're on, don't want to be known as the group that ruined Social Security. And while, yes, it's been getting ruined for a long time, at least from a fiscal perspective, and if you're the ones that are in power when Social Security doesn't pay those distributions, that's what you will be known for. It'll be your fault if you're in power when that occurs. So I think it's likely we get a fix at some point here in the next, two presidential cycles for sure.
Right. Okay. Doug, I think this will need to be our last one just because I know Jeff's time is running out. So from Randy, we hear, if someone took an RMD earlier in the year, can they still return it before the end of the year?
That depends. If this had been before August 31st, then the answer would have been yes. There was special guidance released by the IRS. However, if you did not meet that earlier guidance, then either you'd have to be within the 60-day window, which presumably you're not, otherwise you wouldn't ask this question, or if somehow you could classify that earlier year distribution as a coronavirus-related distribution, that would work. Because remember, the coronavirus-related distribution has 3 years to be rolled back. But in order to qualify, you do have to meet that either fiscal or physical impact because of the COVID-19 crisis this year. So I hate to say, hopefully in that situation, the client would qualify because it means some bad things happened to them earlier this year. But in a kind of weird way, from a tax perspective, if that's what the client wants, hopefully that bad thing already happened to them. They've recovered from it now, and they can move on. And if that would be the case, then they could roll that money back. Again, not because it was an RMD taken earlier this year, but because they could classify it as a coronavirus-related distribution and then give themselves 3 years to roll back that amount.
Okay. Well, everybody, thanks. If you're a Savvy Tax Planning member and you posted a question that we haven't had time to address, look for it to be answered soon in your next Savvy Tax Planning newsletter. I also want to alert all our listeners right now, viewers, that Jeff, starting tomorrow at noon Eastern Time and 9 a.m. Pacific Time, will kick off day one of his 4-day IRA virtual workshops. So if you want to take a deep dive on IRA topics, get schooled up, get a fresh perspective, and listen to Jeff tell great stories that you can absorb and tell to your clients as well, then there's still time for you to enroll in the program. Just go to horsesmouth.com and click on events, and you'll see the link to get registered. So hopefully we'll see you tomorrow. Jeff, thanks so much. And Doug, thanks for your work on this, and thanks for everybody's questions.